Good evening, good morning, wonderful traders. It's been a little while. I uploaded some videos or made some content. Today, I just want to quickly give us a rundown of how I made $1,000 trading GBP USD this morning during London section across um, CPI news today. All right, GBP USD. Most of you might be just or might be surprised, like, okay, why is it trading GBP USD instead of Euro USD? Like you said, those pairs are correlated pairs, and I noticed that GBP USD was moving fine, and Euro USD since yesterday and today has been bullish. Yes, but then became very slow, like it's consolidating throughout today. Yeah. Okay, this is it. I'm going to run a back test of how I was able to trade GBP USD today. And this is clearly, from this trade, it's clearly 1:2. This one is 1:5 because I took retests. Then if it's with this one is 1:9 risks to reward. And the trade got to this point and I was off the market. I made, got, sorry. Okay. Yeah. Clearly 1:7 weeks to reward. So if you're trading a proprietary firm, this one alone can should have given you something nice, about 7%. All right. I would have given you about 7%. And this was the time the news. So this is around 7, 8 a.m. Nigerian time, which is our London section. I told you that whenever I want to trade mostly GBP pairs, like Euro USD, USD pairs rather, GBP USD, Euro USD, uh, AED USD. It's always nice for you to trade during London section and New York section, but anything Asian section, just forget about it. They'll keep ranging. So that's why I brought about using that Asian high and Asian low or London Q zone, like I said. We also have New York Q zone. So I need to trade New York Q zones. The strategy I also have about for US 30, Nasdaq, and S&P 500. It works well during this time. But this year, I said it's just me marrying GBP, Euro USD. It's just me marrying you. We're done. This site is still loading. Okay. While this gold charting app is loading, let me quickly show us how I was able to get that entry. Most of us, if you're very observant about GPUSD, you agree with me that we have been bullish. All right, we've been bullish and we're bearish. Then we're now making a retracement to the upside. All right, completing the. Okay, you can see my chart. So this is GBP on the daily. All the while we've been coming to the downside. All right. From here, we're going up, making higher highs and higher lows, higher highs, higher low, higher high, higher low, higher high. Instead of making another higher low and higher high, it did not. So here we come. a protected high, all right? Thereby, we're breaking these lows, these demand zones to the downside, all right? So now, having seen that, on the daily, we broke up, we made this lower low, lower high, lower low, lower high, lower low, lower high. We made another lower low. So we're supposed to now making this with the continuation of the downtrend, we have to go a little bit higher to this point because this is lower low, lower high, lower low, lower low. Then we're supposed to make a lower high, then we break below again until we continue to the downside. All right, so just the continuation. And for those that trade break and retest, all right, you agree with me that this was this is the market broke this point. All right, broke, made this retest, is broke again. So it's a continuous movement to downside. So clearly the market should come to this point again to make another retest properly, then continue to the downside. So I'm seeing GBP USD, all right, pulling into this point more, then crash to the downside. All right, crash to the downside. Worst case scenario, we should have a trend line again from here. All right, trend line this way, still indicating that we are still below this trend line. You can see multiple touches. This trend line is serving as resistance. So you can see it's broke, resisted, all right, crashed again. So worst case scenario, it could just pull a little bit in here, then drop back. So for anything above here, then we're trending back to the upside because definitely here now is going to cause what we call change of character. Then the market is doing what? Trending back up. So, but for now, we are coming to the downside. So, like I said, worst case scenario, we're going to tap into this place, then we'll melt back down. All right. But for as for SMC traders, it's clearly simple. Here is what lower low, lower high, all right, then lower low. So if as an SMC trader, I would want to enter or wait for the market to come to this where to this supply zone. This is the supply zone. All right. So let me delete this. So this is clearly the supply zone. So when I say supply, is an area to look for sales. So this is on the daily. All right. Then if you want to also know what to do, then you can also I can also use my Fibonacci to measure from this high to this low. From this high to this low created. And already you know that this is a breakout structure to the downside. So this is clearly me analyzing GBP USD. So if you don't want to take on the buy, you can wait for the sell. So this is clearly breakout structure. So we're waiting for the market. That's if you want to take a sell, for the market to return back to this place. So this supply zone then drop. And you can see how it tangented. Let me use that word, tangent. All right. Most of my engineering students would understand when I say something, when I use the word tangent, so they're going to understand. So you can see it's corresponded with this trend line. Okay, see? So this is the supply zone, making a tangent with this trend line, confirming that, okay, we are coming to the downside. And of course, what we call risky entry and confirmation entry when it comes to SMC. So if for those that would want to set their sell limit around here, then it's fine. You wait for the market to tap into that place, forming in conjunction with this trend line, which is serving as a confluence, then you can sell off. Back to the topic of how I was able to cash a trade on London section across New York section trading the CPI. So this is clearly it. In the morning when around 7 to 8 when I woke up. All right. First of all, always create this habit of whenever you wake up, try to check if there is any fundamental news because we have three types of trading. We have the technical, which is what I'm showing you right now. We have the fundamental and the sentimental. All right. The technical is the one you do on your system by using chart patterns, market history, and the rest of them. All right. Support and resistance. So, but when it comes to news trading, so it has to do with fundamental. That's the fundamental part of it. That you follow what the news. It has to do with government policies. All right. So this is what happened. When I open the chart, I already know the direction of the market that I'm trading to the upside based on what I just showed you on the daily. All right. It's a form of counter trading, but then when you know the right spots to enter, then you're good to go. So when I saw this trade, first and foremost, I spotted out this uh, uh, liquidity. All right. And then that's why you're seeing that line there. Then the next thing I spotted out was I looked for this break of structure here. All right. This pull to the downside was as a result of NFP. You can look Friday, January, this pull. And whenever there is uh, news, you can see the market created what we call imbalance here. All right. So the market will always, whenever after any news, any high impact news, you can see Friday, 10th of January, all right, around 14:30. And if you're in Nigeria, 14 is around 2:30. And that was when the news happened, the NFP. All right, I caught this sell. All right. So the market have to go and rebalance this market, or what we call inefficiency. So the market had to go rebalance it then before going back. All right. And this was what it did during CPI. The news pushed up, the buyers pushed the market. All right. When they pushed it, then to balance up to fill in this inefficiency, then they drop. In fact, I even had a sell trade on gold. You understand? But I was spiked out before it dropped. That's after taking this back. So I look at what I explained again. After this CPI, I took this buy on CPI. All right. Look at the market have to come and rebalance this place after the news. It came down again. Then before it will now start going to the intended direction, like I said. So my bias on GBP USD is still bullish. So having said that, this was how I got into this trade this morning. All right. Now let me put on this indicator, the Asian high and Asian low. All right. So when I open why is it not showing? Okay, very good. Look at it here. So let me zoom in. All right. So when I woke up this morning, look at the time. You can see 8:15. Around that 8:15, the market already has swept liquidity above. Like something that I said, there's liquidity below, which has stop losses. There's also liquidity above. All right, this Asian high. So now I sorted out this break of structure. The next thing again, liquidity. So as SMC trader, we trade towards liquidity. What's our liquidity? Equal highs and equal lows. So I spotted this liquidity. All right. So when the market swept this high, it was here. So the first CPI this morning spiked down and took stop loss. All right. So since I've already spotted our liquidity and I know the intended direction and I was targeting this overall high as my TP. All right, as the overall TP though, but my TP1 was actually here. Okay. So plus this inefficiency. When I say inefficiency, ICT traders will say fair value gap. So this is what we call institutional candle. So you can see if I extend it this way, you see how the market taps into that place, then crash down. So that's an institutional candle. Institutional candles are large body candles. So whenever you see a large body candles like this and it's broke structure, always know that there is what? The other block here is going to hold, especially you should be looking for selling opportunities. I'm going to teach us a strategy like that. All right. So if I go to the 1 hour time frame, you see the reason why GBP/USD sold after CPI. Where is it? Where is it? All right. All right. So this is clearly it. If I want to mark this, what is an order block? Other block is the last bullish candle or the last bearish candle. So this was clearly the reason why GBP/USD sold. CPI took it to this point, then it crashed. So whenever you spot out, uh, I'm just going to just a very simple strategy. All right. I'm going to make a lesson for that. Whenever you spot out this large candle, it's called institutional candle. So it broke structure here. You can see clearly. It also broke structure here. Clearly. All right. So since it broke structure this way, it's indicating that there will be a sell around here. There'll be a sell. So that was why it's sold. But it's selling, it came to balance of the gap created or this thing now. Here is also an order block. And that was why when the market tapped into it, all right, the market tapped into it, this order block here, if I go to a more lower time frame, is bouncing off. All right. Let me not make this lesson too long. But the reason for this CPI is that, as in for this buy, is to balance off the inefficiency here, then drop. But the overall trend from the daily is still, I'm still bullish until we get to this point. You can see the trend line up there, here. And for those that trade chart pattern, you can also see, I'm not analyzing GBP/USD yet. I'm just trying to give a recap. For those that understand chart pattern, you can see this shoulder, head, market tapped in, creating the next shoulder, the market broke above it, form a break of structure. This strategy I'm using as an SMC trader to trade head and shoulder patterns. So you can see this is clearly head and shoulder pattern played out clearly. 1, 2, 3, 4. All right. If you don't understand, let me illustrate. This is it. This is the left shoulder. All right. This is the head. Sorry, excuse me. So when I say the head and shoulder, I mean inverse head and shoulder, please. Inverse head and shoulder. All right. What am I even doing? Hold on. I'm not drawing correctly. All right. Left shoulder. All right. Head. All right. Right shoulder. Then this is clearly it. All right. So the strategy is after you've spotted out a breakout of the right shoulder, you you mark out the other block that caused the break of that, because if I should do this way, you see that this high was broken, which was the liquidity I said I spotted out during the low section. All right. So that's why this other block now that caused this break of this pattern. All right. I'm not actually making this lesson to teach us all this, but then I just have to combine it, but I'm going to make a different lesson for that. But if you want me to elaborate more on this, please drop it in the comment section. So this is clearly left head, inverse. There's a shoulder, inverse head and shoulder. So that there's a break of structure, or you can call it change of character. So the market broke it, which was the CPI, now returned. Now it's going to go up. So this now is serving as a confirmation entry. So we're getting up to this trend line. Then before we can decide to come down, to continue the downtrend. So now back to when I was explaining that happened in London section today. So let's go to the 15-minute time frame. All right. So on the 15-minute time frame, like I said, I spotted out liquidity. All right. And this is the head the Asian high, Asian, this is Asian high, this green box, what's color. Then I spotted out this liquidity too, because this bottom is still selling us. So the market cleared those that were trying to that were selling here. All right. Then the first CPI that hurts it spiked down and grabbed stop loss. But being that I already know the direction, I I still joined on this trade again, even though I was spiked out on the first one. My entry, so as trader always risk what you can account can carry. Can see this place has been mitigated. The market sweeping coming to the main threshold, almost to the main threshold midpoint, then went up. So the moment I spotted that, okay, the market has tapped into the swept out those who were trying to sell, buy from this particular order block, or I grabbed their stop losses, or you can call it that was a sweep of liquidity again, trying to grab stop loss of those that were here. Then I joined on this trade and I held until CPI. All right, so that was how I made $1,000. Then I was out of this trade. I was out. Clearly, 1:7. So if you're trading a proprietary firm, then you should have made 7% out of 8%. Then you're good. It's a good one. Then you're out of this trade. So that, and you remember I said my strategy, my normal rule for this year is making 1:4. So if I wanted to make just 1:4, then this is clearly where I would have made what I want to make from here. All right, from here to this point, I've made it, then relaxed. I'll relax for the day. So, but I saw that I was targeting this liquidity here. Then was that high. That was what I got off on time because the news. All right. So this is clearly how I was able to make that money. And while explaining now, I've been able to show you what is going on. Have you been able to tell us what to do, continue, like how to join this GBP USD until we get to this trend line or onto this zone I marked out. So you can see clearly I am still on the 15-minute time frame. So, and this pair, you can see is shooting up because it's trying to go back to that trend line and to this supply zone. So after any news, there will be a correction to rebalance the market. All right. Then boom will continue to the upside. So if you have any question as regards to how I was able to trade this pair, GBP USD today during CPI, please drop your comments in the comment section. Then be rest assured that I am going to answer your questions. And please like and subscribe my video and also share to any group of friends that it wants them to be a part of this dynamic world, dynamic trader. And if you want to join my Telegram, please leave it, ask for the link, and I'm going to add you up to the group. All right. So invite a friend, tell a friend to come and join the winning team. All right. Take care and bye bye. See you on the next one.